Welcome back to 7-Minute Options. Just opening a few more positions today. There's a good positions in SLV that I came across today on the CNBC Options Action podcast. This episode came out on June 4th. Today is June 9th, I believe. Yes, so we are a little bit late to the party here, but it's still a very relevant position, so I'm going to open it anyway. And this is a position in SLV. And basically what they recommended was to sell the 23.5 put and buy the 26.28 call spread. So again, this is a debit call spread and this is a credit put. So we are selling the put and we are using that money to finance buying the call spread. And a week ago when that podcast episode came out, that this was essentially almost free, or maybe like a dollar credit or a dollar debit. Today it's about $5. Back a week ago, they could sell the 23.5, but since then we've had a little bit of an uptick. So now it's the 24. But still, it makes sense. It's $5 debit, and basically you have a $400 upside. And I would be, if I put this on, I'd be looking to get out somewhere around $300 of profit. If I look at the chart for SLV, it's been hanging around here around the 26.27 mark, and then it has a bit of a pullback here, and it's been bouncing around, going sideways mainly for the last week or so. And if it continues to move up, we'll make some good money on this position. If it just goes sideways, then you know what, we might end up just losing the $5. And really the only risk is if it goes way down to the downside, below 24, in which case it's a naked put, so it's very easy to roll, and we might end up rolling this. Again, this is 72 days away. This is the August expiration, so that gives us 72 days to be right. Again, the main vehicle here is a debit call spread. I don't mind buying a debit call spread because IVR is very low. So there's a good chance that this call that I'm buying might actually increase in value just from volatility going up. And that's what we want to. So when IV is very low, it's a good time to buy. When IV is high, it's a good time to sell. And I'm not scared by the 24 naked put because I can always roll a put. And that doesn't concern me. So the other good thing about silver is it's not that correlated to the spiders, to the overall market. So if I look at correlations here, I just checked this earlier today. Over the past 3 months, SLV and spiders have a correlation coefficient of about 0.6. Ideally, you want to go for 0.0, right? If there's no correlation between the spiders and SLV, that would be ideal. But a correlation of 0.6, it's okay. I'll take it. I'm not particularly concerned about it. You can see here, I'm going to be paying $5, taking a $390 buying power hit. The options here are quite liquid. This market is a penny wide, which is beautiful. And picking up 44 deltas, but really only 1.8 SPY weighted deltas on this position, which is very good. My portfolio is quite positive with respect to SPY weighted deltas. So I'd be looking to put on some negative deltas, but I'll take the positive 184. I like this position. Again, it's the CNBC Options podcast that recommended this, and I like it. So I'm going to put it on and see where this goes. The other position I put on today, and I just put it on earlier, so that position has already filled, was Clover. And again, I like to stay away from these meme stock kind of things, and Clover is definitely one of those crazy stocks. But if you are going to play in like the GameStops and the AMCs, make sure you have defined risk. So what I did with Clover is Clover shot up for 2 straight days, had a huge pullback. And so what I did is I sold a put. And right before this madness here started 3-4 days ago, Clover was, in between $7 and $11 here. So let's say like a long-term average of about $8 or $9. So what I did is I went out and I sold 37 days away. I sold a $10 put and I picked up $70. Actually, what did I pick? I got $67. Excuse me. I got $67 for selling the July expiration $10 put. And as soon as I opened it, I put the GTC order in to buy it back for $20. And so I'm hoping that as the volatility, look at the volatility spiking up there, as the implied volatility kind of dies down a little bit, maybe Clover can start to flatten out somewhere between $10 and $20, and my $10 puts are going to start losing value quickly. So I think I can actually, make my 75% target here on this put option over the next week or 2 weeks, especially if we start going sideways and have a volatility crush. So that's my plan there. Yeah, those are the two positions I opened today. All right, thanks.